We want ambitious founders. Not everybody can become a unicorn, I understand. Not everybody can do an IPO, I understand. But you have to have ambition. So if you're very small in your thinking, in your goals, we're not interested. Hi ASEANPATH, I'm Eddi Danusaputro, CEO of Mandiri Indonesia. Happy to join you in sharing my views on how we can increase business between Indonesia and South Korea. Mandiricapital Indonesia is the corporate venture capital subsidiary of Bank Mandiri, one of the largest banks in Indonesia. We are part of a financial services conglomerate called Bank Mandiri. It is a state-owned bank and one of the largest state-owned enterprises in Indonesia. We have 12 subsidiaries, including securities house, mutual fund, insurance, multi-finance, even a stake in a Sharia bank and a pension bank. And lastly is Mandiri Capital, which is the corporate venture capital subsidiary of the group. We've been in existence, we've been in the market for more than 5 years. We're quite proud of our returns above industry average, approximately 3x in about 4+ years. And the reason I think that one of the contributors of having a good performance in terms of returns is because we are active investors. We are not passive investors. We don't just put money into a startup and say, okay, so we invest money into a startup and then we actively grow the traction. We bring the startup into the Bank Mandiri group, the bank and the 12 subsidiaries. So there has to be a collaboration between this startup and the group. If there is no collaboration from the beginning, we won't invest. So from the beginning, we always have to think, okay, what sort of collaboration can this startup have with the group? After we invest, we make that collaboration happen, whether it's loan channeling, new product, new distribution, efficiency with digital signature, cloud-based accounting software for lenders and our borrowers. So that has to happen. So actually, a big part of our KPI is not only return, but collaboration, the synergy aspect. We have 15 startups in our portfolio. 15 divided by 5 years, we invested about 3 startups per year. They're all in fintech or fintech enablers. Because we are owned by a bank, our mandate is very clear, help the group. So we stick within the group's needs and competencies, which are financial services. So we predominantly in fintech, Southeast Asia, and we prefer early stage, meaning that we prefer Series A. Yes, we've done Series B, yes, we've done seed, but 80 or close to 90% of our investments are actually at the Series A stage. We feel this is a good stage where there's still upside in terms of potential return, but the valuation is not too expensive yet. So we've deployed $80 million for the past 5 years in predominantly fintech in 15 startups. In terms of my life, I started off actually not in finance. I started off in consumer goods. And I started off from the beginning, like selling to the side street, to the pharmacies, to the supermarkets, selling consumer goods, product shampoos. I think that's very important. Even when I moved into finance, that salesmanship part is still there. I think whatever you do, even though you are for example, you are an IT programmer, at the end of the day, you still have to be able to sell because you have to sell what you did, what your product is, right? You have to have hard skills, but you have to have soft skills. And one of the soft skills is salesmanship, communication, selling an idea, selling a product, and that sort. After business school in the US, I joined Morgan Stanley. I enjoy the fact that it's fast-paced, dynamic, minutes and seconds, everything can change, stock price, this and that. I started off in asset management and started off with hedge fund, which in 2008, 2009, we lost everything. Global crisis happened, where Lehman Brothers, Bear Stearns all collapsed. Everybody collapsed. We collapsed also. Our fund closed. Investors wanted to invest in asset classes that they can touch and feel. In private equity, you're investing in companies. So we stopped doing a hedge fund. We went into private equity. Eventually, I was asked to join Mandiri Capital, which is venture capital. I always ask when I meet with founders, startups founders, what problem are you trying to solve? And the problem has to be big enough. If the problem only happens at your neighborhood or your university, it's not big enough. So the problem has to be big enough. 2 is your solution to the problem. You have a problem, but if the solution doesn't fit, then it's not going to fly. The business is not going to fly. So you have a problem, you have a solution. And then you go into more detail. What is your go-to market strategy? What is your business model? Business model means how to get your revenue and profit and so forth and so forth. Because if you pick the wrong business model, then it's very difficult to go switch to another business model. For example, if you are a freemium model, you cannot suddenly change into a subscription model. If you are a commission model, you cannot suddenly change to a different business model, right? It's very difficult. And this is maybe number 4 is most important, is we look at the team, we look at the founder. At the end of the day, we're putting money, we're investing not only in the company only, we're investing into the founders. Because in my view, the market will change, the regulation will change, the competition will change, the product may change, the pricing will change. But we need founders that are agile enough, persistent enough to maneuver with all of these changes. And number 5 is the roadmap. We want ambitious founders. Not everybody can become a unicorn, I understand. Not everybody can do an IPO, I understand. But you have to have ambition. So if you're very small in your thinking, in your goals, we're not interested. So I think these are the factors that we look at when we want to invest in a startup. We invested into a POS. A POS is a point of sale company, more like an online cashier. Merchants, like restaurants and stores, they put all their SKUs in there, their products, and then when somebody orders, they can enter how much was ordered, what the price, and everything. So we invested in that to help Mandiri payments, because Mandiri did a lot of business with these merchants in terms of the payment points. It was a good investment. After 3 years, it was actually bought out by GOJEK. So Mocha was bought by GOJEK. We got almost 5x of our return, but not only that, we received shares in GOJEK. Many CEOs, it's just a one-way dialogue. They will tell you what to do. I try not to tell my team what to do. A lot of senior management, they will say, I want you to get to A to D. And the way you get to A to D is first A to B, B to C, C to D. I don't do that. I just tell my team, look, I want us to get from A to D. How you do it, it's up to you. As long as you get from A, whether you go to C first and then B, go back to A and then straight to D, up to you. I'm not going to micromanage. So I try not to micromanage. If you have a problem, come to me. You have to give team a little bit of room for them to experiment. Banking also supports companies, but in the form of a loan, which means if something happens, there is a collateral that the bank can collect. Venture capital is equity, it's all equity participation, which means that if we like a company, we will buy 10%, 20% of that company. But there is no collateral. So if the company doesn't succeed, then the company goes bankrupt and we lose our investment. We lose everything. There's no collateral. There's no downside. There's no recourse, right? So I always say that banking is like dating. There's still a plan B. But venture capital is like a marriage. There's no other choice. You have to become a part of the company. And that's what I try to tell everybody, is that when we become 10%, 20% owners, we have the right to be involved in the entire decision making. Maybe not on a day-to-day basis, but at least on a monthly or quarterly basis, or the big decisions, we have to be involved. We cannot be passive investors. And hopefully the startup sees it that way. Because if they don't see it that way, then it's just all going to be a lot of fights. The reality is that we have 270 million population. Young, a middle class that likes to spend. This is pre-pandemic, and post-pandemic it'll be the same. Young demographic, 270 million, a middle class that is moving up and they like to spend. So it's a good market, not only for startups, but just in general. People, they buy smartphones. People who first started off with a motorcycle, now they want to buy their first car. People who used to rent, now they want to buy their first home or their first apartment. So it's a growing middle class economy. And the startups, they cater to that market. The e-commerce, the online travel agencies, the ride-hailing startups, they all cater to this demographic. But I think it's just a start. If we want to leapfrog as a society, as an economy, we have to embrace technology, digitalization. For example, a lot of people who used to not have internet, now they have internet and smartphones, 3G, Wi-Fi, whatnot. Information is there. People who used to be difficult in the villages to shop online, now they can shop online. A lot of development, including financial services. Banks, it became very expensive for us to open up branches in all the villages. But now with mobile banking, internet banking, all of this, we don't have to have a branch in every village for financial services. We can use agent basis, we can use a mobile basis, we can reach the end consumer better. Development as a country, if we embrace that. 270 million people, 16,000 islands. Logistically, it's very difficult to cover all of Indonesia. I think logistics is very promising. It's to connect all the other sectors, e-commerce or the other. Secondly, health. We don't have enough doctors. We don't have enough hospitals. So we have to utilize technology to reach the patients, whether it's through telemedicine or other ways of health tech, but we need that. EduTech is the same. Why? Because we have a lot of young generation, but not enough teachers and not enough schools. So another way to tackle that problem is through technology, distance learning, teaching. And not only because of the pandemic, but even beyond the pandemic, people can learn a lot through technology, the enabling by technology. 2 years ago, 2019, I was in Guru. I was a judge in a pitching competition. There's a difference between being a judge in a pitching competition in Indonesia versus a pitching competition in South Korea. In Indonesia, e-commerce, logistics, food technology, fintech, health tech, edutech, very consumer-facing sector. So mostly B2C. I went to Guru. Most of the business startups, they were pitching me very advanced. Artificial intelligence, nanotechnology, and the founders were like PhD or, the IT, they worked in IT during their military service, very advanced. But the market, not there. The reality is that we have 270 million population. The concept of marketing also not very strong. Whereas here, we're very good in marketing, but our technology is not very good. In South Korea, very advanced technology, but the marketing is standard. Here, the marketing is very good, but the technology not so good. So I think we can combine that. If the South Korean companies that are very good in tech, like ABCD, I always say ABCD, artificial intelligence, blockchain, cloud computing, and database management. If any of the startups in South Korea that are strong in here want to come to Indonesia and partner with a local startup and get invested locally also, many opportunities. Happy to join you in sharing my views on how we can increase business between Indonesia and South Korea.